This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Hello and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bonds, and I'm lucky today to join not one, but two guests, which is a rare treat for the podcast. We have Rob and Mark, both from Agentiv-X. Gentlemen, nice to see you. Good afternoon.
Good to meet you.
Good afternoon, Alex.
Good afternoon. And it's a Friday afternoon, so this is proof to our American listeners that people in insurance do work on Friday. But it is 3 o'clock, so we should be getting to the pub very shortly. Look, thank you for joining me. Really, real pleasure to have you on. I think we're going to have a really interesting conversation. You were fighting amongst yourselves about who was going to do this, but if you could introduce yourselves first, and if one of you could take a stab at introducing Agentiv-X, that would be great.
Great, thanks, Alex. I'll kick off. My name is Mark Twigg, and I'm the CEO of Agentiv-X. And very briefly, we describe ourselves as a decision co-pilot for people working in complex risk markets. So whether you're a broker, an underwriter, or a claims manager, we are there to support that decision-making process with evidential reasoning through our AI proprietary tool.
Amazing, great stuff. And Rob, that's just you to introduce yourself then now.
Yeah. So hi, I'm Rob Agnew. I'm the Chief Strategy Officer at Agentiv-X. As Mark said, we've been busy developing a decision co-pilot for complex risk, and I guess it's my job to build out the go-to-market and the commercialization of that product. With our first engagement being with the broker community, looking at policy comparison and placement optimization.
Amazing stuff, great stuff. Well, I mean, we start with some the problem. Let's lay out the landscape. Lloyd's Blueprint 2 has failed. Probably the slowest death ever in public. But the market's need for modernisation hasn't gone anywhere. So, in your view, as a business, what's the single biggest inefficiency holding the London insurance market back?
I would say, obviously, the reason for Blueprint is still there, and I think that reason is essentially data inefficiency. Data is often siloed. It's immobile. A lot of the data that is collected sits in emails or it sits on Excel spreadsheets. And at all points in the market, people are having to rekey and reconcile data as that data moves through, as the policy moves through its life from inception to claim. And I think the problem we've had, and the frustration that always comes up, is that this creates so much friction at all points in the value chain that people spend a lot of their time on pointless administration. And I think the issue is not about just speeding up the process, but actually looking at the process and understanding what drives value and what can be made redundant. And I think ultimately that does require some kind of blueprint too, but I don't think it's necessarily something that would be implemented market-wide by Lloyd's. I think it is something that will be much more efficient and effective if it's done primarily at the firm level.
Yeah, I think I've always thought that with a lot of these initiatives that are market-wide, and that, of course, when you've got Lloyd's and you've got a market that is unique in its way, there should be a drive towards efficiency from the market and from the people that run the market. But at the same time, it's kind of against almost economic principles, that in that, people will kind of have their own different stages of development. And all these market-wide initiatives always end up being like the inefficiency of like centralized government. You know, it's the classic thing of there's
Yeah.
too many cooks with different interests. It's hard to get people on board. So yeah, I'm completely in agreement that it's going to be kind of business to business that makes the difference. I think, you know, I was lucky enough to have a conversation with you guys before the recording. And I think this thing really sat with me was that you'd said, and you touched on it there, Mark, that this adoption versus transformation thing of AI. I mean, you know, lots of insurers are using AI to speed up legacy processes rather than actually transforming them. Um, I think it's really important, that distinction, and sort of, I'd love to get your view on what actual real transformation actually looks like.
Yeah, I'd probably just dive in there, Alex, and say, yeah, I think it's exactly that distinction. I mean, when you have a huge technological evolution like we have seen with the advent of large language models and AI, I guess the draw to for a lot of technology companies is to look at the way things are happening as they are in legacy and existing processes, and simply try to optimize them, make them go faster. So workflow automation and point solutions are abundant within the insurtech community right now. And I guess the question that we're trying to answer at Agentiv is actually, should this process be there at all now that we've got this new capability at our fingertips? I think that goes back to the Blueprint 2 discussion. If you try and standardize the enormous amounts of complex process within the insurance market, particularly in complex lines, what you end up doing is trying to force businesses to reduce their competitive advantage, i.e. the things that they think they do really well and the way that they do things differently to other companies, into a perfect sort of compliant box. And ultimately you get pushback, and that's why these things don't work. So, you know, those processes, those existing and legacy processes, they were required for the digitization of the industry to take place, or as much of that process that has actually happened, in order for them to scale. You know, if we have more products, more lines, more specialism, so more delegated authority, you need process in order to govern that scale, and also to make it manageable. You know, so being able to take huge amounts of data and allow and streamline it into a way that a human professional can actually interpret and make a decision on the basis of. And what we've now seen with the advent of large language models is that need for process is no longer there, because in terms of simplification, well, if you've got large language models that can go out and source and organize huge amounts of high context data, and what I mean by high context is we're not just going out and extracting a word or a key term, but we're actually extracting the sentiment and the meaning of that evidence, and we're able to do that in a way that allows humans to intuitively understand that evidence coming back and cast their judgment more efficiently over it. What used to take us 12 steps now probably takes us 2 or 3. And so things do move faster, but not because we've optimized an existing process, but because we've actually just got rid of it entirely. So I guess that's what we mean by truly transforming the operating model with new technology.
And if I can just add to that, Alex, to sum it up, it's the distinction between, it's a state of mind. What do you actually want to achieve? Have you got a tactical mindset where you simply want to speed a process up? Or do you have a strategic mindset where you want to look at the whole value chain and understand what's driving value in my business, and how does AI help us focus around that? And the things that aren't driving value, how do we make them redundant? And I think there's been far too much that's tactical, looking at the deployment of process and workflow, and not enough of the strategic, which actually looks at what's driving value in my business and how does AI drive value. I think when you put the focus on value rather than cost, then you move from adoption to transformation.
I just couldn't help but I used to be a claims guy a long time ago, which anyone listening to the podcast will be bored of hearing about, but that's what I used to do. And I remember, and then for the first 10 years of my recruitment career, all I did was actually recruit claims professionals. And I remember the excitement around ECF, and then I actually got to see it, and I was like, oh, so what you've done is just copy the paper form and then put it onto some technology, and I just think that's the perfect example of what market-wide transformation is often tried to be. It's like just it's not taking advantage of the new opportunities. I described AI as just changing the art of the possible. That's what's changed. So the idea that you just digitize existing processes or systems is obsolete at best. But unfortunately, we do see it quite often, particularly in the market-wide things that we're trying to do. There is this problem with AI, really, that I do think we're getting there and getting there quickly. But the conversation we had previously, Jets, was about trust. It was a big part of it, and that seems to be a large part of what you're tackling. So the business is Agentiv-X is building what you describe as an AI trust layer. Wonder if you could explain what that means and how it sort of audits decisions, because that seems to be the key of making AI work in a regulated market.
Well, essentially what we are doing is we are codifying the context behind the decision. So the expert will help us to identify what the attributes are within a document or set of documents that they need to extract and understand. And they will then give us the what-if scenarios as to how they would interpret that in the real world. So all of that tacit knowledge around what shapes their decisions is captured within the system. And currently, without Agentiv, all of that tacit knowledge is lost. It's not codified or written down anywhere. So the different actors in the market don't understand, as well as they could do, what shapes people's decision-making. And where you don't have transparency, you're less likely to have trust. If people understand what is driving decisions and they can see that, they can see the rationale, and it's transparent, then that helps people to not just understand what other people are doing, but to trust what they're doing. You can see whether they're acting in good faith. You can see whether they're acting on the basis of the best information. And that's where the trust comes from. And the fact that we're encoding that and capturing it and it's recorded means that, and it's recorded in real time. So you can actually look at the data in real time and you can audit and analyze it. You can review it. That's where I think that trust layer comes from. Right now, we've got too many people making decisions based on large amounts of unstructured information, whether it's the policy forms, the proposal forms, the policy wordings, the endorsements, and we don't really capture what's behind all of the decision making. And I think by doing that, you can understand how your counterparties are operating. And that's just not building trust between the counterparties. The fact that you can then share that information with the regulator and they can see how you're behaving and what's driving your decision making creates trust with external stakeholders, the regulators, the clients, policymakers in Westminster. So it's putting transparency at the heart of the process and being able to become more accountable for what you're doing and sharing that information, I think is what really creates that layer of trust.
Do you think about how much does the regulator need to get on board with this? Because it's we can share that with the regulators, but are they on board? Do they I don't know if you've had any communication with them or talking about looking at auditing in this way. It's just something I'm not aware of at all, so I'm sort of interested to know if there's any conversations that have been had.
We've had active dialogue with the FCA probably over about 4 or 5 months. Clearly, they've got their AI supercharged sandbox, so they're looking at how AI can apply to the marketplace. Sheldon Mills has got his review that's ongoing, which I think is publishing sometime around June time in the summer. And then they will be looking at the big issues around how do we encourage AI adoption, but do so in a way that is safe and doesn't harm consumers or present risks to the marketplace. And I think that conversation has to happen because I think we've been slightly gung-ho over the last 3 or 4 years. We've all sort of got drunk on the potential possibilities of AI and the things that it can do to transform our working days. There are risks associated with this technology as well. And if you put that risk into the context of a regulated market, where those risks have regulatory and legal consequences, then we do have to invest more time in understanding what those risks are and identifying them and mitigating them. And I think we will see a more muscular approach from the FCA and other regulators around the world as this technology rolls out. There was a report from the International Association of Insurance Supervisors back in December, which said that they anticipate there's going to be an increase in risk related to AI over the next 2 years, but that the supervisors, the regulators themselves, don't have the toolkit to understand what that risk is. So the risk might actually mushroom much quicker than people think it is going to. And I'm not entirely sure we're prepared for that. And one of the reasons why we developed Agentiv is because it gives the compliance teams and the regulators, the supervisors, more data, more structured data to understand what the risks are and to help head those risks off at the pass.
Yeah, I think that's the core component of all of this, of course, is just explainability. And large language models are black box. And the interesting sort of move across the regulatory landscape broadly, be it here in the UK, across the EU or in the US, is to just try to move forward with this idea of human in the loop. And as long as there is an expert reviewing what is coming out of these black box technologies, then ultimately that's the key safeguard. And I guess our pushback, and Mark and I have discussed this at length over the course of the development of Agentiv, is if that professional can't interpret how and why that recommendation from the large language model was formed, how can we expect them to govern that decision and that recommendation appropriately? They are being influenced by these tools, and I think they're very aware of that. And therefore, they need to be able to identify what the driving factors are in the recommendations that are produced. And so, explainability doesn't just sit at the core of being able to regulate this technology. Explainability is the source of unique competitive advantage for us as Agentiv-X as well, because if you can explain as a broker to your client why you've recommended a policy, that's usually helpful in building trust and driving more cover across a number of other lines. If you as an underwriter are engaging with a broker and you can see and understand why they've put forward the information that they have and the cover that they need and the exclusions that they want to avoid, it's easier to come into alignment on that decision. And so we see it roll all the way through the value chain, and the regulator ultimately needs to stand behind their core precedent, which is, if it isn't explainable, then it's not governable.
Interesting. Because I mean the regulation piece is really the thing that everyone likes to moan about and throw mad at the regulators. But we'd be in a worse market if we didn't have them. But I actually think, relatively speaking, they're doing a pretty good job of keeping up to pace on this, which is surprising. I think some in the more non-regulated use of AI worries me significantly more than the stuff that we're talking about today. So one thing that we talked about, and I loved your approach to this when we spoke previously, was your belief about getting the senior practitioners in the market involved in building these AI systems. But how do you capture decades of underwriting judgment in a way that AI can be effective is probably the question.
Yeah, absolutely. So effectively, the system works in three steps, three sequential steps. We spend time with the senior brokers, underwriters, and claims handlers to understand what they are looking for when they are evaluating a key high-stakes decision. And so what we're able to do is design a set of decision parameters, or what we label as attributes, that they believe inform their decision one way or the other. So for a claims handler, for example, whether there is whether the risk is covered or not. From an underwriting perspective, whether or not this risk should be written against appetite and guidelines and so on and so forth. So we sit down with the expert and we identify those. The way that we use large language models is that we then send the large language models off the agents themselves to gather and organize evidence behind those attributes. So the tool remains continuously expert-led because the large language models aren't running around their corpus of knowledge from the internet. They are focused only on the documentation that's uploaded into the system, and they're guardrailed by what the expert wants them to go and fetch and organize. And then that information comes back into a really clean view of the risk and the proposed cover. And what we then do is apply the decision science behind that. So we worked with the University of Manchester to develop a proprietary decision science algorithm, leveraging evidential reasoning that allows us to weigh trade-offs between premium and cover, for example, and also quantify uncertainty in the way that a human being or an expert would do so. And what that ultimately means is that if you don't have evidence behind a certain attribute, the tool will tell you that. So it's not like a large language model in the sense that it'll always try and encourage you down a single answer or a single recommendation. The tool will actually say, well, actually, based on the information that you've given me access to at the moment, I can't make a recommendation either way. This is a 50-50 call based on what you've provided me so far. And so what we're doing is we're mapping and trying to simulate exactly how the professional would make that decision, but providing the scalability of that capability through the large language models.
I was having a slightly cynical thought as you were laying that out, because I remember when I first.
It is 3:30 on a Friday. You're allowed to be cynical.
I'm British. I think it's cynicism's in the blood, isn't it? I think that's how we're white. That's how we're white. But no, I was thinking that. I mean, I always found it. I mean, it's going to offend quite a few people here, but I don't work with the Lloyd's market as much as I used to, so I don't have to care so much. I always found it hilarious when I understood what follow market underwriting was, and I was going, so in theory, I know this guy's a really good underwriter, so I'm going to write anything that he touches, which is, it seems to be a lot of people made long careers out of that. But the point I was getting to slightly was that people are not rational actors, and we think we are, and we think we make rational decisions. And you know, there is a lot of good underwriting done with the knowledge base of these really senior, really experienced people in the market. But then I do wonder what might actually be thrown up by building AI models around things like underwriting, and whether it throws up some anomalies or even like questions long-held beliefs. And I don't know how far you've got with some of that, but do you see that? Sometimes it's like, oh, this is a held belief that this is a good risk or this characteristic, when actually it doesn't really have any basis in reality. I wondered if you've sort of observed any of that yet.
Yeah, absolutely. Yes, yeah, that's absolutely right. And what we're effectively delivering here, though, is the ability to rationalize every decision, whether that is whether that ultimately the outcome of that decision, which in underwriting, as we well know, may not be forged for many years after the fact. We are, once that outcome becomes real world, we're able to then distinguish, because we've captured the rationale of ultimately the why the decision was made. We're able to optimize these models constantly with real world outcomes, but also we're not just collecting one person's perspective here. This is a set of decision attributes agreed across your brightest and best. And when the tool is then placed across numerous underwriting desks, for example, the weightings behind each of those attributes correspond to whether the expert agrees with the recommendation that is being provided by the tool, and to what degree each factor should be taken into account. So we are able to deploy out of the box without any access to huge amounts of corporate data, huge data lakes or anything like that. And we're able to drop an out of the box solution. But ultimately what this tool will do is it will optimize behind your proprietary beliefs and your corporate USPs, because it's how your underwriters choose to agree or disagree with the recommendations that ultimately fuel the future recommendation.
I think to your original point, Alex, I think what it has demonstrated is that a lot of it is, a lot of the decision making is quite idiosyncratic. People have their own traditions, their own views, their own set of experiences. And when we've done testing across groups of professionals, we've found that inconsistency does come out in the wash. Now, again, that inconsistency is difficult to monitor, and there might be individual underwriters who are quite happy that that's not made transparent, but at the C-suite, they'd love to know what's going on at the coalface. If you can capture that data. And it doesn't mean that anyone's wrong or in trouble. It just means that there may well be decisions that are taking place across the business that could be framed in a different way if people had access to the information. So I think it will have an impact in changing the way people think and behave. There may well be some decisions that are made that people don't want transparency over. Not every claim that is paid out should have been paid out. There's going to be areas of leakage that will come to the fore that some people might not want to be transparent about. So there are going to be things I think that will come out of the wash. But broadly speaking, do I think transparency is going to be transformative in a good way? Absolutely. And that is going to be good for companies with their commercial priorities. It's going to be good for clients who want the right policy with the right level of cover. And it's going to be good for the regulators overseeing the market, who can have confidence that the market's going to be more compliant with the rules and less likely to have misconduct, letting down the industry from a reputational perspective or customers from a financial perspective.
Yeah, I've touched on that a few times in the more transparency we have. There's a lot of the industry that skirts the line. And it is those commercial decisions of paying a claim that maybe shouldn't be paid, but in the balance of things makes sense to be paid. And there's also definitely things that are insured that probably shouldn't be. And if we know the full information, they wouldn't. And that's where I see there being a tension in the future. But that means that we need to find better ways of being able to insure those risks and being able to kind of maybe not pay those claims. And maybe that transparency helps with that, because I think some of the kind of, having been a claims guy, and we had to make quote unquote commercial decisions on claims to pay them on the balance of broker relationship or client relationship. But with the level of transparency we're able to offer now, I think that becomes a much harder argument to make. But it also becomes a much more understandable thing for that broker or that customer, because then it's kind of, it's always been in the areas of the grey without that transparency that's led to those decisions being made. Sorry, Rob, did you want to come in on something?
Sorry. I just think it's a really good point at the point of claim. If you imagine we live in a agentive world where at the point of placement, you've captured all of the justification for that policy being written, and that has been explained perfectly to the client, not through a enormous set of policy wordings, but actually really intuitive language and rationale. Well, then at the point at which this policy is claimed on, the reality is the alignment between the insured and the insurer already exists. And so it's a long-term view for sure, but one that we're pretty motivated to see happen sooner rather than later.
I think we all in, it's funny, insurance, isn't it? I don't know if you do this, but I find myself defending the industry. Like, my friends are literally, I'm on a big WhatsApp group. It used to be arranging drinks and going to sporting events. Now we're like 43, 44-year-old men were usually moaning about energy prices or something like that. And the latest one was someone having their insurance go up, and I always get defensive, and I was like, well, this is why that's happened, and this is what you've got to do. But I think when there's a big event and we see these people disappointed with the insurance industry, we all just have this collective groan because we all know that actually that policy probably would have explained very clearly that you're not insured for this event. But there isn't clarity. And I think, Rob, you make a great point there in that this will allow us to be more clear, more transparent, better, easier to understand. And then maybe, just maybe, people will kind of fall in love with the industry a little bit more.
Well, if I could just add to that,
Mark, yeah,
Alex,
please.
if it's a sort of a call to curb our cynicism for a second, because I've worked around the industry for 25 years, and I've spent most of my career mopping up the reputational issues from mis-selling or misconduct. And it has happened throughout the industry throughout that time. I worked on PPI mis-selling. I've worked on critical illness issues. I've worked on the protection market, lots of general insurance issues. Wherever you've had scandals around market coverage issues, for the last 25 years, I've done a lot of work with a lot of insurers where things have gone wrong. And where I say sort of suspend your cynicism, I always come back to this fundamental point, and that is that insurance is essential for the functioning of our economy and our society. People would not buy houses or cars if they couldn't insure them. They wouldn't step on a plane if the plane wasn't insured. There's so many things around our lives that require this market to function well. And my passion and my commitment, and the reason why I've come to Agentiv at this stage in my career, is because I want the insurance industry to be the best it can be, because so many people, businesses and households, depend on it being the best it can be. So we have to get this right. And I've been saying that for 25 years. And in many ways, we have got better. We have made progress. I think the industry in the 1990s wasn't a patch on where we are now. That's not to say there's still a lot of things that need changing. But I think we've got to recognize the importance of the sector, societally, economically, and also, if I can wave my flag for a second, it's a UK PLC. It's a massive export earner for the UK. So for all those reasons, I want it to be an amazing industry that shoots the lights out. And I want Agentiv to be part of that process in an industry getting better. So that's kind of my motivation in this. It's someone who's been on the inside, seen it warts and all for a quarter of a century, but still has this never say die commitment to getting it to function as well as it can.
I couldn't help but slightly laughing as you're talking about suspend my cynicism, and you've got a poster for all the president's men behind you about the Watergate.
Well, Watergate is exactly why you have to keep your chin up.
Don't trust anybody. Funny.
What you can't see is the massive picture of Richard Nixon on the other wall.
I've got a poster of it's got a very cool piece of art on my wall where I've got a picture of the photographer who took the famous Che Guevara photo. And it's a photo of him sat in front of his photo, which is just off shot. But I occasionally wonder if it makes me look like a revolutionary, but we're no sure. And I better keep quiet about that because I'm travelling to the States soon and I might not be welcome.
Yeah, that's right.
Yeah, gents, this has been a blast. We had more questions, but we've run out of time. And I think Mark's kind of summation of kind of it's a really nice way to end it, because I think it's too easy to be cynical, and I think it's too easy for, certainly outside of the insurance industry, people to think that we're just here it's just another financial services sector, just there to make money. But I do believe in it as a force for good, and certainly a force for business. So, but I will be fair to you and go on to the last question, because I was going to say, Agentiv-X is very early in your journey, but in 2 years' time, where do you want your clients to be? What's that future state look like? And then we'll leave it at that one, I think.
Well, thank you for the opportunity, Alex. I think, put simply, if I had to describe what we are and where we're heading, I would say, as an AI tool, we help brokers and underwriters make better placement decisions faster and with a clear record of why that decision was made. And I think what we want to get to within 2 years is a position where, by using this tool, our clients are able to give clearer recommendations. Their teams can make more consistent decisions. Their senior expertise is scaled rather than stretched, and they can grow their business and grow the capacity of their junior staff. We've got a lot of people who are coming up for retirement in the next 5 years, and that tacit knowledge is going to be lost. If you can capture it and transfer the knowledge to the next generation, that is a massive opportunity for us if we dare to invest in it. So I think there's a lot of good things that will come out of our journey in the next 2 years. And hopefully, as I said, carrying the industry with us, we can help embed a lot of good practice and generate a lot of value for the sector.
Brilliant stuff. Mark, Rob, thank you very much for being good fun and great guests on the Leadership and Insurance podcast.
Thank you, Alex.
Great. Thank you, Alex.